Here's a situation that happens to seniors across this country every single week, and almost nobody warns you about it beforehand. You deposit a check, maybe from selling your car, maybe from a settlement, maybe from a family member who paid you back a large sum, and then 2 days later, you go to pay a bill or withdraw some cash, and your bank tells you the money is not available yet. The funds are right there in your account. You can see the deposit on your screen, but you cannot touch it. Your bill is due today, your rent is due tomorrow, and your bank is holding your own money, and you do not fully understand why or for how long. I want to be completely upfront with you about something from the very start of this video. A bank hold is not a punishment. It is not a sign that something is wrong with your account, and it does not mean your bank is trying to cheat you. There are specific federal rules that govern exactly when and why this happens, and once you understand those rules clearly, the whole thing stops being frightening and starts being something you can actually plan around. By the end of this video, you will know every major type of hold, the exact thresholds that trigger them as of 2026, how long each one can legally last, and the practical steps that reduce the chances of being caught off guard by one when you need your money most. Stick with me, because there is one specific situation near the end of this video involving a certain type of check that surprises even experienced bank customers, and it has caught more than a few retirees in a very uncomfortable position at exactly the wrong moment. I'm your host here at Retiree's Guide, and if this is your first video with us, subscribe right now, because every week we break down exactly what you need to know to protect and keep access to the money you have worked your whole life to save. Let's start at the very beginning, because I think the most important thing to establish right up front is what a bank hold actually is and why it exists in the first place. When you deposit a check into your bank account, your bank does not immediately receive the money. The check has to travel through a processing system that involves your bank, the bank the check was drawn from, and a clearing network that sits between them. During that process, your bank is essentially extending you credit, making funds available to you before it is actually confirmed that the money is really there on the other end. If your bank makes those funds available immediately and the check later turns out to be bad, either because it was fraudulent, because the person who wrote it did not have the funds, or because it was returned for some other reason, your bank absorbs that loss unless the funds have already been withdrawn, in which case you could end up owing your bank money for funds you already spent. A hold is simply your bank's way of protecting itself, and honestly, protecting you as well from exactly that scenario. The federal law that governs all of this is called the Expedited Funds Availability Act, and the specific regulation that puts it into practice is known as Regulation CC. These rules tell your bank exactly when it must make deposited funds available, and also define the specific circumstances under which it is permitted to hold funds for longer. This is not something your bank invented or decided on its own. These are federal rules, and every bank and credit union in the country is required to follow them. Here is the important update for 2026 that a lot of people are not yet aware of. These thresholds were officially adjusted effective July 1st, 2025, meaning the specific dollar amounts have changed compared to what you might have read about or experienced in years prior. I'm going to give you the current numbers throughout this video, so everything you hear today reflects exactly what is in effect right now. Let's start with the most common situation most people encounter, which is depositing a regular check from another bank. Under Regulation CC, as currently in effect, your bank is required to make the first $275 of that deposit available to you by the next business day after you deposited it. That amount was raised from $225 when the updated thresholds took effect on July 1st, 2025. So if you deposit a $500 check on a Monday, your bank must have $275 available to you by Tuesday, and the remaining $225 becomes available by the second business day, meaning Wednesday in that same example. For most everyday check deposits, this timeline works smoothly, and most people never think twice about it. The situation changes meaningfully when you deposit a larger check, and this is where the rules get more specific and where more people get caught off guard. Under the current updated Regulation CC thresholds, any check deposit exceeding $6,725 is classified as a large deposit, and your bank is legally permitted to place what is called an exception hold on the portion above that threshold. To be precise about how this plays out in practice, your bank must still make the first $275 available by the next business day, and must make the remaining funds up to that $6,725 threshold available by the second business day. But for everything above that threshold, your bank can hold the excess funds for up to 7 business days from the date of the deposit. What this means practically is that if you deposit a check for $15,000, the first $6,725 becomes available within the first 2 business days, but the remaining $8,275 can legally be held until the 7th business day. Some banks may extend to the 9th business day in specific circumstances depending on their individual policies. I want to be clear that this is a legal maximum, not a guarantee of how long the hold will actually last. Many banks release funds faster than this, particularly for customers with a long positive history at that institution. But legally, they are permitted to hold it that long. And if you are counting on that full amount for something specific, not knowing this rule could leave you in a genuinely difficult position. This is mistake number one, and it is the one that catches the most retirees off guard. Assuming that because a large deposit shows up in your account balance, all of it is immediately available to spend or withdraw. Your available balance and your total balance are two different things, and your bank's app or ATM screen will typically display both separately. The available balance is what you can actually use right now. The total balance includes funds that have been deposited but not yet released from a hold. If you have ever tried to pay a bill or make a withdrawal and been told you have insufficient funds, when you can clearly see money sitting in your account, this is almost certainly what was happening. The solution is equally clear. Anytime you're expecting a large check deposit, call your bank ahead of time, tell them what is coming, how large it is, and when you will need access to the funds, and ask them exactly how much will be available and when. Banks have the discretion to release holds early in some circumstances, particularly for customers with a clean, established account history, but they are far more likely to exercise that discretion proactively if you have had the conversation before the deposit arrives, rather than showing up at the teller window in a stressful situation afterward. Let's talk about what kinds of deposits are not subject to these holds at all, because this is genuinely useful information that can help you plan how to receive money in certain situations. Under Regulation CC, the following types of deposits must be made available by the next business day after deposit with no hold permitted at all, cash deposited in person with a teller. Electronic direct deposits, including your Social Security payment, or pension check, wire transfers, money orders issued by the United States Postal Service, cashier's checks, certified checks, teller's checks, and official government checks from federal, state, or local agencies when deposited in person. These are treated as the most reliable forms of payment under the law and receive immediate or next-day availability by federal rule. This is specifically worth knowing because if you are selling a vehicle, completing a real estate transaction, receiving a significant payment from someone, or receiving any other large sum of money, having the funds sent to you as a wire transfer directly into your account rather than as a personal check can eliminate the hold period entirely and give you same-day or next-day access to the full amount. Now, let's talk about a situation that catches retirees at a particularly vulnerable moment. And this is the one I promised you at the beginning of the video. It involves new account holds. Under Regulation CC, if your bank account has been open for less than 30 calendar days, it is considered a new account, and your bank is permitted to hold check deposits significantly longer than the standard rules would otherwise allow. Specifically, for new accounts, the entire amount of check deposits above $6,725 can be held for up to 9 business days. Why does this specifically matter for retirees? Because a meaningful number of older adults switch banks each year, often chasing a better interest rate on savings, a higher yield on a money market account, a more user-friendly app, or simply a fresh start after a frustrating experience at their previous institution. And what nobody tells you at the moment of opening that new account is that for the next 30 days, large checks you deposit there are going to move significantly slower than you are used to. You might deposit a check from your pension administrator, your brokerage firm, the proceeds from selling a piece of property, or an inheritance payment, expecting it to behave exactly as it would at your old bank, and then find yourself waiting almost 2 weeks for full access to funds you genuinely need. The practical solution is one I have mentioned before, but it bears repeating here. Whenever you switch banks, keep your old account open and at least minimally funded for 30 to 60 days after opening the new one, so that if a large check needs to be deposited quickly during that transition window, you have the option of using the account with an established history rather than the brand new one. Let's talk about the repeatedly overdrawn exception, because this one affects people who may not even realize they have triggered it. Under current Regulation CC rules, if your account has carried a negative balance for 6 or more business days during the previous 6 months, or if your account has been overdrawn by more than $6,725 at any point during that same period, your bank is permitted to apply the same extended hold rules to your deposits going forward that it uses for new accounts. This is specifically relevant to retirees living on fixed income, where Social Security deposits or pension payments arrive on a specific date, while bills may be due a few days before that income lands, creating an accidental cycle of brief overdrafts that nobody intended, but that quietly accumulates into a pattern that triggers this exception. The fix is the same one I have recommended throughout this series. Call your billers and ask them to shift your due dates forward by a week or two to better align with when your income actually arrives. Most companies will do this without any pushback, and eliminating that overdraft pattern not only avoids the fees, but also keeps your account out of this exception hold category going forward. There's also a hold category called the reasonable cause exception. And this is the most discretionary one, the most misunderstood one, and honestly, the most important one to know about from a consumer rights standpoint. A bank can place a hold on a check for longer than the standard rules would otherwise allow if it has a specific, documented reason to believe the check might not clear properly. This could include situations where the check has previously bounced and is being redeposited, where it is unusually old, or where other specific circumstances suggest an elevated risk that the funds will not be collected. Important if your bank places this kind of hold on your deposit, it is legally required to give you written notice at the time of deposit explaining that a hold is being placed, what the stated reason is, and exactly when the funds will be available. If you deposit a check and nobody tells you a hold is being placed, and you later discover your funds are not available when you expected them, ask your bank for the written hold notice they were required to provide. Banks are not always perfect about providing this notice at the moment of deposit, particularly at ATMs, and knowing this requirement exists can help you resolve the situation more quickly and with more confidence. Let me specifically address ATM deposits because the rules here differ in ways that trip people up. If you deposit a check at an ATM rather than with a live teller in person, your bank has until the second business day after the deposit before it is required to begin making funds available rather than the next business day. And if the ATM you used is operated by a different financial institution than your own bank, your bank may have additional time beyond that. For large check deposits specifically, using an ATM instead of depositing in person with a teller can add a full extra day to the timeline before the first portion of those funds becomes accessible. If you are depositing a large check and need access to the funds as quickly as possible under the law, going inside your branch and handing it to a teller in person gives you the most favorable timeline available, and it also gives you the opportunity right at that moment to ask the teller exactly when each portion of the funds will be released, so you can plan accordingly. I want to spend time on something that specifically affects retirees more than almost any other demographic, and that is what happens with checks tied to estate settlements, inheritances, and the sale of a home or property. These tend to be among the largest single checks most people ever handle in their lifetime, often ranging from tens of thousands to hundreds of thousands of dollars. All of the rules I have described apply fully to these deposits, and in some cases, banks may apply additional scrutiny precisely because the deposit is unusually large relative to your normal account activity. I have heard from viewers who were completely caught off guard when a $50,000 estate check took well over a week to fully clear, leaving them unable to pay bills they had already arranged, assuming that money would be available sooner. The solution requires a bit of planning. Before you receive any unusually large check, whether from an estate, a property sale, an insurance settlement, or any other significant source, call your bank, explain what is coming and approximately how large it will be, and ask specifically whether there is anything you can arrange in advance to expedite the hold or receive the funds through a faster channel. Some banks will review your account history and agree to reduce or waive the hold for long-established customers. Others may suggest a wire transfer instead, which, as I mentioned, carries immediate availability by federal rule. Either way, having that conversation before the money arrives puts you in a fundamentally better position than trying to negotiate after the fact, when you're already waiting on funds you need. There is a specific type of deposit worth knowing about that regularly surprises people, and that involves checks drawn from an account at the same bank where you are depositing it. These are called honest checks, meaning both the person writing the check and the person receiving it bank at the same institution. Because your bank can verify in real time whether the funds exist in the other account, the hold rules for large, honest deposits are more favorable than for checks from outside institutions. Rather than up to 7 business days, large, honest checks can only be held for 1 additional business day beyond the normal timeline under the exception hold rules. This matters specifically if you're receiving a large payment from a family member, a business partner, or anyone else who happens to bank at the same institution as you, because the timeline for that money to clear is significantly shorter than if the check came from a different bank entirely. Let me take a moment to address something genuinely reassuring, because I want this video to leave you feeling more informed and more in control, not more anxious. The Regulation CC framework was specifically designed to balance 2 competing interests, protecting banks and consumers from losses on returned checks on one side, and protecting consumers from having their money held unnecessarily on the other. The fact that the dollar thresholds were adjusted upward in July 2025 from $5,525 to $6,725 actually means more of your money is available to you sooner than it was under the previous rules. And beyond those legal minimums, many banks choose to release funds faster than the law requires, particularly for customers who have maintained their accounts in good standing over a long period of time. Your personal banking history genuinely matters in how hold policies are applied in practice. I also want to address what to do if you believe a hold has been applied incorrectly, held longer than legally permitted, or placed without the required written notice. These situations do happen, and you have real recourse when they do. If your bank has violated the notice requirements, held funds beyond the permitted maximum for your situation, or applied a hold in circumstances that do not qualify for any of the exception categories, you have the right to file a complaint with the Consumer Financial Protection Bureau, either through their website at consumerfinance.gov or by calling their consumer helpline directly. The CFPB actively investigates regulation CC complaints, and documented violations carry the potential for civil liability on the part of the bank. I'm not suggesting you should file a complaint every time a routine hold is placed, since most holds are applied legally and for legitimate reasons. But knowing this option exists, and knowing what the rules actually say, puts you in a meaningfully stronger position to advocate for yourself when something genuinely seems wrong. One more situation worth covering involves the movement of money between your own accounts, because this is increasingly common as more retirees manage multiple accounts at different institutions to take advantage of better interest rates. If you transfer funds from a money market account, a certificate of deposit, or an investment account into a checking account, or if you wire money from a brokerage to your bank to cover an upcoming expense, the availability rules for those transfers are generally more favorable than for check deposits. Wire transfers and electronic transfers have next day or same day availability in most cases under Regulation CC, which is precisely why financial advisors consistently recommend wires over personal checks for large, time-sensitive transactions. If you are moving a large sum between accounts and you need those funds available quickly, understanding this distinction can save you significant frustration. The wire fee, typically ranging from $15 to $30 depending on your bank, is worth calculating against the convenience of having funds available immediately rather than waiting several days for a check to clear. Let's also mention a quick daily habit that connects everything we have covered today. Most banking apps now display both your total balance and your available balance clearly, often on the same main screen. Getting into the habit of glancing at your available balance rather than just your total balance before planning a payment, scheduling a transfer, or preparing to withdraw cash takes literally 1 second, and it prevents the frustration of planning around money you can see but cannot yet access. If you have never specifically looked for that distinction in your banking app, take a moment this week to find exactly where both numbers are displayed so that the next time a large check clears partially, you know exactly what you're looking at and exactly what it means. There's one more topic I want to cover before the wrap-up, because it has quietly become one of the most common ways retirees encounter an unexpected hold, and that is mobile check deposit, sometimes called remote deposit capture. Most banking apps today allow you to deposit a check simply by taking a photograph of the front and back of it with your phone's camera, which is genuinely convenient, particularly for anyone who prefers not to make a trip to a branch for every deposit. But mobile check deposits carry hold rules that are slightly different from what happens when you hand a check to a teller in person. Many banks apply longer standard holds to mobile deposits than they do to in-person deposits, even for the same check amount, specifically because the bank cannot physically inspect the original check at the time of deposit and relies instead on the image your phone captures. Some banks cap the amount you can deposit by mobile in a single day or a single month, and amounts above that cap must be deposited in person or by another method regardless of preference. Beyond the standard holds, mobile deposits also carry a specific risk that rarely comes up in conversation but is worth knowing about. If you deposit a check by phone and then forget you have done so and also deposit the original physical check at a branch or ATM, your bank may flag this as a double presentment, which can temporarily freeze your account while they investigate, even if the duplication was completely accidental. The simple habit that prevents this is writing the date and the words "mobile deposited" on the back of every check immediately after completing a mobile deposit, and then holding on to the physical check in a safe place for a period your bank recommends, often 30 to 60 days, before discarding it. Some banks now also update the status of a mobile deposit within the app itself, confirming when it has fully cleared, which is worth checking before doing anything else with the same check. I also want to briefly address counterfeit and fraudulent check scams, because they are directly connected to why the hold system exists and because they affect seniors at a disproportionately high rate. A common version of this scam involves receiving an unexpected check in the mail, often far larger than expected, accompanied by a message claiming you have won a lottery, been selected for a remote job, or being paid in advance for some service. The instructions tell you to deposit the check and then send a portion of the funds back through a wire transfer, a payment app, or gift cards before the check fully clears. The check looks real. It may even pass your bank's initial processing without immediately bouncing, but within days, or sometimes weeks, it is returned as fraudulent. And because you have already sent the portion they asked for using funds your bank temporarily made available, you're left responsible for repaying that entire amount to your bank. This is precisely why the hold system exists, and why financial counselors consistently say it out loud and clearly. If you ever receive an unexpected check in the mail accompanied by instructions to send any portion of the money somewhere else, do not deposit it. No legitimate lottery, no legitimate remote job, and no legitimate overpayment scenario works this way. The check is fraudulent, and the hold period would not protect you here because the amount sent was likely drawn against the initially available portion before the full hold expired. Simply do not engage with any check that arrives, paired with a request to send money back. Let's bring everything together into the practical habits that will actually serve you going forward. Understand that a bank hold is a federal rule with specific timelines, not a personal decision your bank is making about you. The large deposit threshold under current Regulation CC rules as of July 2025 is $6,725, meaning any check above that amount can have the excess held for up to 7 business days. Anytime you are expecting a large check deposit, call your bank ahead of time and ask specifically when each portion will be available. When you switch banks, keep your old account active for at least 30 days because new accounts face extended hold rules for the first month. Align your bill due dates with your income arrival dates to avoid accidental overdraft patterns that can trigger extended holds on future deposits. For large, time-sensitive payments, ask whether receiving the funds as a wire transfer rather than a personal check would give you faster access. Honest checks from the same bank clear faster than checks from outside institutions. Watch your available balance rather than your total balance when planning withdrawals and payments. And if a hold is applied incorrectly or without required notice, you have the right to file a complaint with the Consumer Financial Protection Bureau at consumerfinance.gov. I want to close with the thought that runs through everything we cover on this channel. The banking system has rules, and those rules exist for real reasons. The holds we have discussed today exist largely to protect consumers as much as they protect banks, by ensuring that money is not withdrawn against a check that later bounces, leaving you in the unexpected position of owing money you have already spent. Understanding those rules does not mean you have to accept every situation without question. It means you walk into every banking interaction by knowing exactly what the rules are, knowing exactly what your rights are, and knowing exactly what questions to ask before a problem ever has the chance to develop. If this video helped you understand something about bank holds you did not fully know before, tap that like button right now. It genuinely helps other seniors find this information when they need it most. Here is my question for the comments this week, and I am genuinely curious about your experience. Have you ever been caught off guard by a hold on a large deposit at exactly the wrong moment? And what did you do when you talked to your bank about it? Drop your story below, because real experiences like yours help every other viewer in this community know what to expect and what to say when the same thing happens to them. And I read every single comment personally. And if you know someone who is about to receive a large check from selling a home, settling an estate, or any other significant source, please share this video with them right now before that deposit happens. Because this is exactly the information that is so much less stressful to learn beforehand than to discover in the middle of the situation itself. Subscribe if you have not already, ring that notification bell, and I will see you in the next video. Take care of yourself and take care of your savings.